Thank you for having me. My name is Charles Allen. I'm the CEO of BTCS, and I'll go through our corporate presentation today. First off, just take a moment and read the safe harbor statement regarding forward-looking statements. So first off, I'd like to go through our investment highlights and goals for 2021. Right now, BTCS is an early mover in the blockchain digital currency ecosystem, and we're the first U.S. pure play public company focused on blockchain and blockchain infrastructure and digital assets. So we have three operations. First is our blockchain infrastructure solutions, where we generate revenue by securing a blockchain such as Ethereum's beacon chain. We're also developing a non-custodial staking as a service platform to allow users to stake cryptocurrencies through us and generate returns doing that. And that would be an opportunity for growth expansion and additional revenue generation from our current staking operations. In addition to that, we're building a data analytics platform to allow users to connect multiple exchanges to consolidate their trade data in a read-only fashion and potentially have tax reporting features as well. We also utilize a digital asset treasury strategy. We're the first public company to do that, where we own Bitcoin and Ethereum on our balance sheet. And so those are the three segments the company currently operates in. For 2021, our goals are to uplist to a senior exchange, most likely the Nasdaq, to secure other disruptive blockchains in addition to Ethereum to generate revenue, and to launch a staking as a service platform and open our data analytics platform. First off, I'd like to give a little bit of an industry overview. We view, kind of blockchains as having the potential to digitize assets and allow for the global transfer of those assets without trusted third parties. And just like the internet allowed for the digitization and proliferation of information on a global scale, we think blockchains will be able to do the same. There are a lot of use cases for blockchain technologies. I think the two big ones that are dominating the media right now are distributed finance, DeFi, and NFTs. NFTs are very interesting in that they're the first kind of killer app for blockchain technologies that do not have an incumbent player in the market. So there's no kind of market for digital art and digital, other digital artworks out there yet. So that's quite interesting. We see enormous market opportunity as we go into the future. Global investable assets are 120 trillion. Cryptocurrency markets are just 2.2 trillion compared to that, which is less than the 11 trillion gold reserve. And with these new killer apps such as NFTs coming out and DeFi, which are getting built upon smart contract-based blockchains, we see huge potential opportunity in this market. So I'll dig a little bit deeper into what BTCS does. I touched on it earlier. We have basically three lines. One is our, securing disruptive proof-of-stake blockchains through our blockchain infrastructure segment. Right now, we're doing Ethereum. We've got our data analytics platform, and we've got our digital asset treasury strategy. Q1 was a really great start. We ended the quarter with 23 million in cash and crypto, over a 4,000% increase year over year. That's about 20 million in crypto and 3.4 million in cash. We realized 3 million in realized gains on the sale of Bitcoin, and we have 7.8 million in unrealized cryptocurrency gains. We've got 15.4 million in shareholders' equity. Management invested 1.1 million in January. I personally invested 810,000. And so including the Series C2 preferred, management owns about 41% of the company. So we have substantial stake in the company, and our interests are aligned with those of shareholders. We've also had great operational developments in the first quarter of 2021. We expanded to 240 active nodes on Ethereum's 2.0 beacon chain, which generated 72,000 in revenue in Q1. And all of those nodes only became operational on February 22nd of the quarter. So we're anticipating over 1 million in revenue for 2021. And it's a very high margin business. We generated 75% gross margins in Q1, and we expect that to expand as we scale, and also when we're not activating new nodes. We also plan to expand in 2021 into additional disruptive blockchains beyond just Ethereum. As far as the company, the management's myself and Michael Hanrahan, who's also a co-founder. We've recently expanded the board. So we added 3 independent directors. Primarily, we're looking to uplist to the Nasdaq. Now our board's, fully, we have a majority independent. We have David Garrity, who's got great experience as the CFO of Interclick, a Nasdaq listed company. We recently added Charlie Lee, who's the creator of Litecoin, former Coinbase lead engineer, and also an engineer at Google. And we added Carol Van Cleef, who's a prominent lawyer within the blockchain space. So we're pretty excited about the board and the expertise that they bring to the table. We're going back to kind of our experience. We've been in the space for 7 years, so we've seen many cycles within the Bitcoin and blockchain space, and we think we've refined our business strategy to create the most shareholder value on a going forward basis, which is focusing on blockchain infrastructure, our data analytics platform, and treasury management. We ended the quarter, with an extremely strong cryptocurrency balance. Right? As I mentioned before, it was about $20 million. That's as of March 31st, based on those prices. As you can see by this chart, it's been, phenomenal growth. As of December 31st, we only had $1 million in cryptocurrency on our balance sheet. And we actually carried cryptocurrency at the lowest value, its lowest price it's ever been since purchase. So at the end of last year, it was actually worth $4 million. As of 3/31, it's going to, on our balance sheet, we expect it to be 12.3 million compared to the, 20 million it's actually worth in terms of fair market value, just because of the way it's accounted for in accordance with US GAAP. With respect to the Nasdaq uplisting, that's a huge goal for the company. We think it'll open the company up to a much wider array of investors and improve liquidity. Now that we have an independent board, we meet basically the Nasdaq initial listing requirements. We have the public float, the number of shareholders. We have 30,000 shareholders. The market cap, we achieved that for both the market standard and the equity standard, as well as the shareholders' equity. And now majority of the board's independent. So the only missing component is having a stock price of over $4, which while I don't like doing reverse stock splits, to the extent we have to do one in connection with an uplisting to the Nasdaq, I think the benefits will far outweigh any of the downsides to doing a reverse. And obviously, you can see here on this chart, Nasdaq and New York Stock Exchange listed companies have total market cap of 61 trillion compared to the 56 billion for OTCQB listed companies. So we believe if we can get up to the Nasdaq, it can create tremendous shareholder value. Just looking at some of our US OTC listed peers, we kind of view ourselves as a value play within the blockchain and cryptocurrency sector. Right now, we traded based on the Q1 numbers, which still need to be reviewed, we traded basically a 2.1 times market cap or price to cash and crypto, and a 3.3 times price to book, compared to just ridiculous numbers of 982 is kind of the average for the price to cash and crypto, and 185 times price to book. And these are just some of the competitors. I think more realistically, some of the ones like MGT Capital, Rocket Fuel, etc., are probably more are better comps where they have similar size market caps. But it does give you a sense of where we are in terms of trading in terms of assets. And this has not been updated with any information that may have been disclosed by these companies subsequent to their last 10K or 10Q. The same for the Nasdaq peers. We've kind of compiled those that we think are most similar in terms of financial comps. There's really no other company right now, U.S. public company, focused on securing proof of stake blockchain. So we're the only ones doing that. But just looking at the Nasdaq peers, the average price to cash in crypto is 30 times, and the average price to book is 20 times compared to our 2.1 and 3.3 times. And the average market cap, excluding Coinbase, which is 63 billion, is about 1.2 billion compared to our 51 million market cap for BTCS. So we think there's tremendous opportunity with respect to shareholder value creation through the growth, just based on us traded at a discount to our peers. Moving on to kind of our blockchain infrastructure solutions, we've previously called that transaction verification services, but we think this terminology better reflects what we actually do. Our goal is to secure disruptive proof of stake blockchains that can power DeFi and NFT ecosystems, as well as other Web 3.0 applications. Our goal initially is to expand our company operations. Right now, we've got $15 million staked on Ethereum's Beacon chain. We're operating 240 nodes. We plan to further expand that, as well as move into securing other proof of stake blockchains, such as we're looking at all the ones listed here: Cardano, Polkadot, EOS, Algorand, Cosmos, etc., with the end goal of building a staking as a service platform, so other users could stake their cryptocurrency in a relatively seamless way through a non-custodial platform that we provide. High level, we think proof of stake is a much more environmentally friendly way to secure blockchains. It's just a better consensus mechanism. There are many huge blockchains that are focused on this compared to proof of work blockchains such as Bitcoin's blockchain. So we're kind of pioneering the way, at least in the public markets, of doing this, and it's something we're extremely excited about. When we look at moving into new blockchains, we kind of evaluate a couple criteria, right? First is what's the quality of the blockchain, the market cap, the liquidity, the utility of the actual blockchain, and the value of the token. And then we look at what's the revenue and earnings potential associated with securing that blockchain, whether we can offer it as through a non-custodial staking as a service platform. And the last is what's the technical difficulty involved in actually deploying and starting to secure that blockchain. So those are the three factors we evaluate when we decide if we want to expand beyond or into new securing new blockchains. And so down below we've listed a couple that we're interested in, and as we move further into 2021, that's something we plan to focus on. With respect to the data analytics platform, I touched on that slightly earlier. We're basically building a platform. You can see some screenshots here where users can connect multiple exchanges, import their data via a read-only API, and then do data analytics on that, where they would be able to get their trade data, either performance data, equivalent of a Sharpe ratio, annualized return. And really what we're looking to do with this is add a social overlay, almost like a copy trade, where you could create a profile for yourself, and you could sell that data or allow someone to follow you for a subscription. And that's that's the plan on how we believe we could monetize this platform, is allowing users to share their data with others and have others follow them. They can charge a subscription fee and we would get a piece of that. So that's what we're working on for the data analytics platform. And we've engaged a development team, an external development team in Q1 to help drive the development of this platform. Here are some more screenshots of what it looks like. And so the roadmap for this is to basically launch a invite-only beta release for testing and feedback in either the end of Q2 or early Q3, a public release by the end of the year, and then kind of move forward from there. With respect to our digital asset strategy, our goal is really to focus on blockchain protocols. Unlike the internet, where you basically had the ability to invest in companies and applications, whether that be Netflix or Google or any of these larger companies, with Web 3.0 and blockchain technology, you can actually have exposure to the underlying protocol by owning the token, whether that's Ethereum or Filecoin or any of these others. And to us, that's extremely interesting. We don't want to take bets on which applications will survive. For instance, if it's Ethereum's blockchain, we like the blockchain, we can secure that blockchain, generate revenue there, and own the underlying token. We don't need to take risks in terms of going into the NFT market or the DeFi market with applications that may or may not succeed, that are kind of beyond the horizon solutions. We believe betting the underlying protocols is like equivalent of investing in the internet back in 2000. So that's where our focus is with respect to Web 3.0 and blockchain technologies. We're focused on kind of key protocol layers. So we can break that into a couple buckets: cryptocurrencies, smart contracts, the Internet of Things, computing and data storage. And we may look to not only own these tokens for the purpose of staking, but also if we like them, if we like the underlying protocol, just to hold them as part of our treasury strategy. So that basically concludes the majority of the presentation. Just to summarize it, we're the first U.S. public company and the only pure play U.S. public company focused on disruptive proof of stake blockchains, excluding maybe Coinbase, which also allows for staking, but is primarily an exchange. We commenced revenue generating operations in Q1 2020 with huge growth potential. We're developing a staking as a service data and data analytics software platforms. We have 23.5 million in cash and crypto, which is far superior to many of our peers. I believe we're a value play. We trade at a low price to book compared to many of our peers. And based on what I discussed earlier in terms of the company metrics, we believe we're a great candidate to uplist to the Nasdaq in the not too distant future. So with that said, that concludes our presentation, and our contact info is available here.